Welcome to today's webinar. We are going to be talking about landed costs. I want to just acknowledge who's on. So today you've got myself leading, Alicia, and then Trisha, she is joining us as well. I am very excited to have her. She is a partner here at Fourlane. And then I have Catherine. Catherine is a senior consultant on my team and have enjoyed working with her since she has come on to Fourlane and has just been a great asset. So these two ladies are here today to help me talk about landed cost and share their stories. All right. Landed cost. So what are we going to talk about today with landed cost, and how are we really going to show you all these things? So landed cost, you know, has been it's a newer feature, I guess. And I feel like this feature was a great addition that was added to QuickBooks Enterprise, and it eliminates the manual workflow clients were having to do before. I remember back in the day having to create these manual workflows with clients and showing them step by step. It wasn't something that was built in. But now we have the landed cost feature built into QuickBooks, and it really helps you track your product cost more accurately and efficiently, right? You're able to use it to factor in things like shipping, customs, duties, insurance, and more things. Once you set up landed cost inside of QuickBooks Enterprise, you're able to use it on any bill, right? Be able to add the true cost to your inventory parts and not really have to remember to do that later on, right? So let me go ahead and get started. I'm going to go open up my QuickBooks here. But let me start with Trisha, and let me ask you, when would you recommend landed cost for a client?
Yeah, great question. So, you know, when we're looking at clients that they're selling products and they're having to purchase them, overseas, and so they're dealing with these different freight charges that they're getting from a separate freight company. It's not included in their bill like we've seen in the past, but basically any industry that is purchasing products that they're receiving outside of the US to where you've got your duties, you've got your tariffs, you've got your freight insurance. We want to make sure that, we work with them that that's really part of your cost. You buy this widget and you have it's for $5, but if you had to pay a separate shipping fee of $2, we want to make sure that that's your part of your cost so that you can see true profitability of that item when you sell it.
One of the things that item profitability, being able to see that, right? One of the things that's changed a lot is the cost of, bringing things in, especially, with everything kind of going on in the world right now. Those kind of freight cost and shipping cost, they're not what they used to be, right? And so what you mentioned about really identifying and recording kind of that true cost, right, to bring that inventory in makes a huge difference in your financials and what it ultimately costs you in order to offer that product, right? In regards to having higher freight costs and things like that, it could result in us needing to increase our ultimate sales cost, right? Catherine, what would you say are some kind of popular industries you would see clients requesting landed costs to be set up?
Absolutely. So I feel like the main people who are asking me about landed costs are people who are perhaps in a wholesale or distribution type model, where they may be, procuring the products, like Tricia said, from overseas. They're paying those high container shipping costs. They may even be paying trucking transportation over land once the product arrives. So there may be several stages of acquiring that product that they're having to deal with to bring it into their warehouses. So in the past, some clients I've had that have been really interested in this are people who are building like custom bikes. They ordered their parts from overseas. Chemical distributors in particular have had a lot of interest recently in landed costs because their costs are rising significantly. They want to make sure that they're maintaining their margins. So any business where you are really honed in on how much does it cost me to sell my product is a really good answer. Obviously, anything with manufacturing as well, if you're buying raw materials and you have a significant amount of expenses related to procuring your raw material for your manufacturing production, that's certainly something we see as well. Another client I have in coffee manufacturing, they import their green raw coffee beans from all over the world, and there is significant shipping and sometimes customs and duties that comes with that as well. So maintaining that within the books and having good line of sights to exactly what it costs me to acquire my product is really important for so many different kinds of businesses.
Yeah, that's really true. And we have a question, and I just want to make sure that we kind of explain this early on. And I'm going to go to the P&L. And of course, I do have a sample file here, but one of the questions that we have is, isn't that a cost of goods sold item? So I think potentially what we could do is kind of explain, as we're talking about why and when we would recommend and who's a good fit for it, like what's the big difference of doing this landed cost the way that the system has this feature set up versus doing straight cost of goods sold. Tricia, do you want to take that one?
Yeah, I think the biggest difference is, if you take and just create a bill and you post it directly to your direct expenses, your cost of goods sold, that's giving you an overall direct expense in that account on your P&L, versus this feature allows you to actually add the cost at each item level. So being able to see that, each item, when I, purchased those inventory items, I had a direct cost at item level versus an overall financial direct cost for my freight. It makes a big difference in, being able to report and making sure that we're profitable on our items.
And I think a lot of that has to do with timing as well. When, like Tricia said, when you recognize that freight or shipping cost immediately on your profit and loss, you're posting that to that month's financials. It's immediately hitting the P&L. When you're using the landed cost feature and you're allocating that shipping, freight, duties, customs, whatever the case may be, up into the value of your inventory that's being held in your inventory asset until that part is sold. And then at that point, it gets absorbed as part of the cost of goods sold of selling that part. So it also depends on how quickly some of that inventory is going to be turned over when you want to see that freight and shipping hit your books, when it's sold or when we pay that initial freight bill.
Right. Because that inventory is still carrying that shipping, freight, custom duties, right? It's still carrying that cost. So making sure it's being captured the right way is good. Let me ask y'all, and I don't know who is more passionate over this one, but we've talked about, who's a good fit for it. Is there an easy explanation where we could say who isn't a good fit? I mean, I know I feel like it's clear, but just for everybody else out there, like who's not a good fit for landed cost?
Well, I think part of it comes to understanding what the purpose of it. A lot of people push buttons, and so we see, oh, I activated enhanced receiving and landed costs and all this, and it's not something that they're even using. Their freight bills are attached to their actual, inventory purchases. So it's more of if they're, to me, what I tell clients is when we start asking the question, do you need this feature? Is, do you get freight bills that are separate when you're purchasing your inventory items? So that kind of starts, the discussion on, do we need this feature? How can we use this feature and implement it into our, instead of keeping it Excel. I have a client that before they were working with us, they were keeping track of every inventory item in Excel, and they were taking those freight bills and they were doing the percentages per their items and keeping it all in Excel. So bringing that into the accounting file and taking away that manual tracking, it's an amazing, like the light bulb, they're so excited to be able to do that.
Right. Wow. Yeah, that's a lot to keep up with in Excel for sure, right? And all too many times, we have clients come to us that are doing everything in Excel, and when we show them this, it's like their face lights up, right? Where, it's like, and it makes us feel good to be able to do this one thing that will make their life so much easier. So if you are that person, right, out there that's keeping track of everything in Excel, this is definitely speaking to you, hopefully, and really kind of goes into my next question of, okay, it sounds complicated, right? It sounds complicated. How easy is it to really set up landed cost inside of QuickBooks? Catherine, you want to take that one?
Sure. I think that once you understand the process for landed cost, it is a very straightforward process. There are some checks and balances you have to do in order to make sure that the system, like everything in QuickBooks, is functioning as it's supposed to. But once the system is set up, there's a couple of accounts. There's an account you would need to set up. That would be your landed cost clearing account. There's also setting up some items that you would need to track the landed cost charges that you receive. So if there's insurance or shipping, freight, duties, anything additional to that, you can set up however many of these special shipping and handling items that you need. And the magic here is that you set these items up and they get mapped to that landed cost clearing account. Now, once those items are set up and mapped to that landed cost clearing account, QuickBooks knows when you enter those special shipping and handling items on a bill that it's going to be part of our landed costs. So QuickBooks really has a very cool system to help us be able to allocate these landed costs to our materials bills.
Yeah.
And
oh, go ahead.
Oh, and it's also a very straightforward module, which we'll show a little later on, to be able to actually process the charges and allocate them to the bill. So I think the interface here to be able to use the system is really clean and very straightforward.
Kind of going into, like the ease of this, right? Trisha, how many items do you kind of recommend for people to set up? How in depth do they need to go when we're setting up these items?
I mean, it's really, what they want to see. I usually say around 3 or 4, your freight, your insurance. Basically, it comes down to what do you get invoiced for? What do you get billed for those separate charges of landed cost? And what do you want to report on? So, do you care if you, have freight insurance and, like duties in the same one? Like, does it matter to you? What do you want to see the detail at your item level that you can track those costs? Is kind of drive what you set up in your file.
Right. We have just trying to monitor, and I'm trying to do my best here. So if we don't get to everyone's question today or everyone's comments, we definitely will follow up with you. But I see one that got put in basically talking about using landed cost. So don't use landed cost if you're billing your customer for the freight on a separate line. So Tricia, I'm going to go back to you on this one, right? Can you kind of talk about, like, if we were to bill the customer for the freight, right? Is this a process that we would want to do still?
In my opinion, yes, because you still want to see what your expenses are to make sure that when you're invoicing your customer for the freight, that you are, creating that line for freight more than, what you paid for, or you can do it as, just a direct cost to them, but, most of the time you're going to want to have some profitability, and you're going to have, want a little bit of a cushion. So I would still recommend putting in that cost for your item so that you can track what your total cost is on the item.
Yeah. Have a ask about fuel surcharges. I know that's my Texas swing kind of coming out, so hopefully y'all understand that that was fuel. And know that that one's probably gonna get a little laugh. Catherine, do you want to take that one? Is that something that we would set up here?
You could, if fuel surcharge is something that's billed separately to you, that could be included in landed cost. But typically the way I see a fuel surcharge is just a line item that's included on a materials invoice. And depending on how significant that is, you'd have to review if that would be worth going through and adding to landed cost. It kind of depends on the materiality of what those fuel charges are adding to your inventory, or to your inventory acquisition cost. Certainly it could be an option. It's just something that you may want to put into perspective.
I absolutely agree, right? Because, the thing is, to one company, that charge may be, a couple of dollars here and there. To another company, that could be huge. And that's really the ultimate goal and the purpose of setting up landed cost, right? We're trying to make sure that, we're able to clearly see an item that we buy for $10. It may not really be $10 when all said and done of me trying to get that product to my warehouse, right? Or to resell. I mean, on top of it, we may have all kinds of extra charges from other companies, shipping companies, things like that, that end up making that $10 item, $15. So if we're selling it for 16 bucks, we're not really making as much of a profit as we thought we were, right?
Exactly. It's hard to sometimes know. One of my favorite accounting mantras is what you can measure, you can manage. And sometimes adding in features like landed costs help us to be able to measure those inventory costs a little bit better, so we can make decisions about what our price points need to be when we sell something. And if you don't have all of the information kind of available to be able to review, it's really hard to know how profitable you're ultimately being. We hear a lot of times that, businesses say, well, my revenue's going up, but I don't seem to be making any more money, and I really don't know how.
Right.
And that's one of the big questions that landed cost comes into play, because like maybe we're spending more on freight and shipping than we thought we were. Maybe we need to figure out a better solution, and this is just one of the many ways that this can help.
Absolutely. Yep. Great there. So, I know we kind of talk to people all the time, and people have different kind of terminologies for things like landed cost, or, full-blown costs. Like, it comes in different varieties, right? So what if a client comes to us and says, I don't even know what you're talking about with this landed cost. Like, how do we explain, which I think we've been explaining, but how do we explain it to them?
Well, it's a little tricky to understand if you're trying to kind of visualize the money moving around the financials. I think sometimes that's one of those things that's a little bit better to demonstrate rather than just kind of verbally describe, because I think once you see it, kind of allocate those landed costs to the average cost of those parts, it makes it a lot easier to kind of process what's happening behind the scenes with the system. Because talking about all those debits and credits going through starts to kind of make everybody's eyes glaze over for sure. So if we want to do a little demo, I think that might be a good way to wrap up our session today.
Perfect. All right, walk me through.
All right, so I believe we already created some purchase orders. And these are the normal purchase orders you would do for the course of your business, where we are sending out purchase orders for our materials. We've also sent out some purchase orders for our freight and our shipping as well.
Let's go find those purchase orders. Where did we find those? Let me go to the vendor center. And we're talking about this purchase order here?
Yep, so that is a purchase order from our freight company. They sent us a bill for $300 from the duties. We also sent out a purchase order to our supplier for 3 different parts for a total of $13,000 for some of our inventory parts that we expect to come in. And we're also going to have a third purchase order we received from our shipping broker for $15 or $1,500, excuse me, I wish it were $15 for the shipping costs. So after our purchase orders have been created, the next logical step in the process is we would go ahead and do our bills to receive these inventory parts and to post these to our accounts payable. This would be the normal process for accounts payable while we're doing this. At this stage, there's nothing different that's happening here. We're receiving our items off of an open purchase order as we normally would. And in this case, we can receive the bill at the same time. And this bill for our main inventory supplier is $13,000.
Oh, and being that we have a sample file, we are going to stick this in a warehouse.
Let's do it. Let's make sure we have our sites in here. Just like normal, if we have inventory sites, serial numbers, or lots, that would all be assigned at this stage, just as it normally would.
Yep. Okay.
And we can do the same thing for our shipping and freight vendors as well.
Perfect. Let me go in and do that.
All right, so once these freight and shipping bills for $1,500 and $300 are posted on our balance sheet, we are going to notice in our landed cost clearing account that we have $1,800 of landed costs that are going to be sitting in an other current asset account called landed cost clearing. So that landed cost clearing is telling us that we have $1,800 worth of shipping, duties, taxes, insurance, whatever the case may be, that we need to allocate to our materials, to our inventory parts. So once we have all of the pieces in play, once we have our materials, once we have our landed costs, we're going to go back to that original materials bill from our supplier, and we're going to go through the landed cost process there. And we're going to do that by finding that bill.
Our main warehouse.
Main inventory supplier. Let's pull him up.
So generic. So
Very generic, but
and,
we don't have to be specific.
Right.
for a demonstration.
Say real fast. I know we have 2 minutes coming up. If anyone wants to see this and they have to leave on time, you will be able to find this on our YouTube. If you can hang out with us for a few more minutes, we're going to try to get through this example, and we would appreciate it. Thank you. All right.
All right, so the next step for us is we're going to click at the top of the screen the Calculate Landed Cost button. This is going to populate up our little landed cost wizard, and I love this tool. So the first thing we have to do at the top section, shipping, handling, costs, we have to select those two bills that we had our landed cost items on. And you want to go ahead and say all for this. I think do custom, because I don't know what your date range is because of your funny
it's a
sample
file. So, you know.
All right, so we have two unallocated bills. Those are the ones we just did. Now we can select these bills. We could select one or we could select the other. It doesn't matter, whatever's applicable to this bill. The next option we have is if the entire bill is not going to be allocated to this materials bill, these inventory bill, you can select an amount to allocate. So once you've selected your bills, the next step is to choose how you want to allocate the costs, and there's several different methods. The quantity is going to allocate that $1,800 by the quantity column, and as you look, and we can see that it changes the amount of the shipping handling cost in the right-hand column based on the number of units that were received. Okay, there are other options that we have as we go through is a percentage. Now, since there's 3 items, it's going to be 33% for each one. That's pretty straightforward and may be applicable to some cases, but that's not really the one that I like for this case. If we continue down, we have amount, which is going to calculate it on the value. So the more costly the item, the more landed cost that they get. Now, there is a fourth option, which is kind of a manual calculation there. That one I have had clients utilize, and that is primarily if you're trying to get landed costs allocated by some sort of internal calculations, such as volume of a container, weight of a container, something like that. Now, that's something you'd have to calculate outside of QuickBooks, but you can manually adjust those numbers. So for these purposes, Alicia, let's go ahead and choose amount. I think that's a nice amount to choose. Okay. And we can see right here what the preview, what the result of that is going to be. So for example, on our top line, we spent $10 per part. That's how much we paid our supplier. But with landed cost allocated to it, that's going to bump up that cost to $11.38. And you can see.
Make sure what everybody understands right here, because I think we have a question where it says, does landed cost affect inventory valuation? So Catherine, can you address that?
It does affect inventory valuation. So if we were to look on the inventory valuation summary right now, and I don't think we can get there with this screen open, we would see that the value of these 3 parts would be exactly as it's stated. It would be $13,000 because that right now is all the information that QuickBooks has. So its average cost is exactly the cost that it has, and it's a value of these 3 parts of $13,000. Once we finish this landed cost process, the value of our inventory for these 3 parts is going to increase to $14,800. Because what happens behind the scenes is that landed cost clearing account, remember with that $1,800, that goes away, that goes out to 0, and the value of that gets added to our inventory asset. So at the end of the day, we've just told QuickBooks that these 3 parts no longer have a total value of $13,000, but their total value is now $14,800. So once we post that to the bill, QuickBooks is going to pop up one more window at us. Now, this is a nice little feature that helps us to make sure that we're kind of maintaining those profit margins that we want to see. So for example, on my second part there, if my original cost was $50, that's how much I pay for it, and my sales price is $100. Now that my landed cost is bringing that up to almost $57, do I need to increase my sales price based on what I know now that part actually cost me? Now, if I update the sales price here, QuickBooks is going to update that at the item card. It is going to put that. So if we, for example, put $120 or $110, that would update that on the item card. Now, this is optional. We don't have to do this, but QuickBooks will pop this window up after every time we do a landed cost allocation. Okay. So once we click one of these options here, we come back to our original bill. Now, the important thing to note here is that the bill value of what we're going to pay main inventory supplier has remained at $13,000 this whole time. So when we go to pay the bill for main inventory supplier, I'm still paying him $13,000, just like I'm still paying my freight broker and my shipping company their bills that they sent me. But what we have on this bill is a lot more information that pertains to landed cost. So on our expenses tab, that's how QuickBooks behind the scenes is going to clear out that value of the landed cost clearing account. So that's allocating those two bills from our freight company and our shipping broker here. And you can also see those same calculations that we saw in our landed cost little wizard screen up here, where now our cost per unit is about $11.38 for our top piece, but our original cost, which is still maintained in the right-hand column of this bill, was $10. So once we hit save and close here and we post this transaction, we'll save it. If we go back and look at the item list, well, let's look at the balance sheet first. I think that would be good. We'll see that that landed cost clearing account is now at 0, meaning we've allocated all of those outstanding things. That account does need some maintenance and some love, just like everything else on your balance sheet. We have to pay some attention to it. And if we look at, for example, our part 2, we can see that the calculated average cost of this part is now up to $56. We also have that landed cost line right below the stated cost of $50 is populating in the left-hand side of the item card as well. So to answer that question, which was a great question, this is affecting the average cost and the inventory value, which is one of the main benefits here, that now that $1,800 is going to be paired with these parts and not just hanging out on the P&L for us. So this is a really accurate way to capture per unit the total cost for these parts.
Absolutely. Okay, well, I know we kept everyone a little bit longer than we had said originally. I do want to just remind everyone, landed cost was today, property management is coming up, restaurant panel, we've got a law firm, CBD industry, and accounting terminology. If there's anything that you would like for us to talk about, providing that to us on our Facebook group. You can always email us as well. But I want to thank you so very much for joining us today. And we hope to see you next week with our next webinar.